Saturday, January 13th, 2018, Monaco 64, home of alternative economics and contrarian views. I want to talk about debt, paper assets, valuations, and the function of precious metals, especially gold, as a revealer of false wealth. And I'm going to use this book here, A Pocket Book of Gold. A Survival Manual for Monetary Mayhem by James E. Sinclair and Peter D. Carlin. I've spoken about this book before in one of my videos, but I'm always getting new subscribers, and it's always good to refresh things. So what am I really talking about? Well, historically, for the last 5,000 years, gold has been money, as we know, or has been used as money. Even J.P. Morgan, the J.P. Morgan, sat at a congressional hearing when asked what gold was. He said, gold is simply money and everything else is credit. So in the last, since 1971, basically, the monetary system has become unanchored because President Nixon closed the gold window temporarily. But that window has been closed since then. So the creation of fiat debt has been astronomical, unlimited, and also the markets have been heavily manipulated by the central bankers in the last 8-10 years with their policies of money printing, quantitative easing. Quantitative easing is basically buying assets by printing money, and they're buying the assets that keep other paper assets high. They're not going out there and buying oil or soybeans or corn or gold. They're going out there and buying bonds to make interest rates low, artificially low, and thus inflating the everything bubble, as people are calling it now. And I agree with that. It's an everything bubble, except for precious metals. But precious metals, when the everything bubble turns and deflates, precious metals are going to reset to the true value that it should be. This is where I come to the book here, page 70, and I'll read off the book and I'll comment on it as well. Gold is a revealer of falsely stated wealth. And I quote, "When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state." Sounds familiar. The only people who are benefiting from the central banking policies of the last 10 years are the very wealthy, or the people that work closely within the system on Wall Street, City of London, Frankfurt. They're benefiting. So it goes on to say, financial and military overextension has a social corollary in overpromised affluence. And overpromised affluence is basically Social Security, Medicare, the welfare state, so to speak. And also real estate, equities, paper assets. And it goes on to say, as expense runs out of control, guarantees to the citizen also explode as politicians seek to retain the privilege of office. Sounds familiar? President Trump's tax plan. I agree that taxes should be low, and I don't even agree with the income tax. That's another subject. But the tax reform plan is actually going to increase the debt. So it's all being financed by more debt. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which one once bought certain things no longer does, but wages have not risen along with prices. Well, this book was written in 2010, if I'm not mistaken, 2009. So they're spot on. And I'll keep going a little bit further. It says, instead of wealth, citizens get saddled with a big chunk of government debt, i.e. created by mismanagement. Well, how do you think they financed the bailout of 2008, all the TARP programs? They did that through increasing the government debt. And who's going to pay for that? We're paying, our children, our grandchildren, our great-grandchildren. That is, unless the system collapses, which will be painful for a lot of people or everyone, but it could be the best thing that ever happened. So it goes on to say the result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation. So there you go. The public gets hurt, and that's what's happening now. I think it's accelerating. You know, the dollar is really coming off. We're testing very near the 91 level in the dollar index. And that's not to say that the euro or sterling or the Japanese yen are safe havens, that they're going to do really well. They're going down as well. It's just that the people who manage the system, the Bank for International Settlements, they take turns for each country. You know, the UK devalued since Brexit. And now the U.S. is devaluing, and then the euro will devalue maybe next year. They all go. It's all coordinated. So don't get the impression that the way to protect yourself if you're a dollar holder or an American is to buy euros or sterling or Japanese yen. The only way to protect yourself is with precious metals, physical gold and silver. Of course, cryptocurrencies as well, but you need to really do your homework. I still prefer precious metals, but cryptocurrency is also an option, in my opinion, because it's a free market money, really, cryptocurrencies, and it's not by fiat. There are pitfalls, of course. Not all cryptocurrencies are going to do as well as Bitcoin. So, what else? The decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. The corresponding rise in gold, especially when it is a global phenomenon as it is now, is in effect a devaluation of all the world's currencies and a restatement of wealth on a global scale. And they finish by saying, falsely stated and assumed wealth, largely created out of the assumption of debts that cannot be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that dominates their wealth. That's inflation. But the powers that be, economists that depend on the banks, that are endowed by the banks or paid by the banks, they've changed the definition of inflation to mean their measure of inflation, the CPI and RPI in the UK. And they're all fudged anyway to trick people into staying in their currencies. And it finishes by saying this happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So what's the point of reading about this? Well, I want to make sure people understand why you should hold physical gold if you do, or physical silver. In my opinion, it's not to get rich quickly, but to protect any wealth that you've been able to accumulate. It protects you against the currency debasement that we're seeing already, and we're going to see even more, I think, in the future. If you want to speculate, you do it through the mining sector, through stocks. Mining stocks are leveraged because, for example, if a mine mines gold at $1,000 an ounce, if gold goes from 1,000 to 2,000, you know, they double their earnings. You know, the stock price will maybe more than triple. So that's why the earnings are leveraged in the stock. So that's what I recommend. And I'm not here to tell you what to invest in terms of leverage, but to protect your wealth, yeah, physical gold and silver. Of course, real estate, real things, tangible goods as well, or land, as long as it's not encumbered with a mortgage or debt, in my opinion. But of course, gold and silver are highly liquid. Gold is the most marketable commodity. You can go to any country, anywhere, and you can sell gold for the national currency. So that's what I want to talk about. I think the next few years are going to be very interesting. In my opinion, you can look at some of my previous videos in the last month I've done about gold and the technicals. I think we're on our way higher in gold. I made a video on the 20th of December saying that gold was ready for a liftoff when we were around 1260. I'm not bragging. I'm just saying that I think we are at the beginning phases of a resumption of a very long-term bull market that, in my opinion, started in around 2000, 2001. And yet we've had a correction that's been frustrating since 2013, really. The top was in 2011, but we didn't really see a big crash until 2013. So that's it for now. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.